Oh, there's so many yummy vegetarian options out there. You could try like lentil soup, veggie burgers, tofu stir fry. The possibilities are endless. All right, welcome. If you're a Canadian small business owner, I'm willing to bet you're always looking for smart ways to be more tax efficient. Well, today we are diving into some really powerful but often missed tax strategies for your family. And this all comes straight from Chapter 9 of the fantastic book, Make Sure It's Deductible. Okay, so let's jump right in with a simple question. But this question, it really gets to the very heart of how you should be thinking about your family's income. So what do you think? True or false? Is it better for one person in the family to bring in $60,000 or for two people to each make $30,000? I mean, it's the same amount of money in the end, right? Well, the answer to this unlocks one of the most important principles of our entire Canadian tax system. And the answer is false. If you said false, you are absolutely right. But understanding why it's false, now that's the key. It's totally crucial for your family's financial health. So let's break it down. It all boils down to one thing: our progressive tax system. You know how it works? The more you earn, the higher the tax rate you pay on each extra dollar you make, so that one person earning 60 grand, they get pushed up into higher, more expensive tax brackets. But when two people each earn 30 grand, they both hang out in those nice, low tax brackets. And the results? The family, as a unit, pays way less tax. It's that simple. And this powerful strategy has a name. It's called income splitting. For business owners like you, this is honestly one of the biggest advantages you have. If you can understand how to use it legally, you can unlock some serious tax savings. So here's the best way to think about it. Imagine your family's total income is one big pie. Now, instead of giving that whole pie to one person who's going to get a huge chunk taken out by taxes, income splitting lets you legally cut that pie into smaller slices. You can give a slice to your spouse, maybe a slice to your kid who's helping out with the business. The magic is, each of those smaller slices gets taxed at a much, much lower rate, which means more pie for your family to actually enjoy. And check this out. This chart right here, it's a perfect visual of why this works so well. You can literally see the jumps. See that? You're in a low tax bracket, then suddenly, bam, you cross a line and the rate jumps. And it keeps jumping. The key to income splitting is to keep everyone's slice of pie below those big jumps. Every single one of those jumps you can avoid as a family is real money back in your pocket. Okay, so the theory makes sense, right? But the big question is, how do you actually do this? What are the tools? Well, let's get practical and talk about what you can add to your family's tax toolkit. First up, a classic, the RRSP. But here's a pro tip that a lot of people miss. Let's say your kid works part-time in the business and doesn't even make enough to pay tax. You should still get them to file a tax return. Why would you do that? Simple. Filing a return is what generates their RRSP contribution room. They might not use it today, but that room builds up year after year. It's like a secret weapon they can use to slash their taxes down the road. And you know, the term earned income is actually way broader than most people think. We're not just talking about a salary. It can be the net income from your business, maybe some rental income you have on the side, even royalties. This just opens up so many more doors to build that super valuable RRSP room for every single person in the family. But it's not just about RRSPs. Your business is like a treasure chest of other deductions that can lower the family's tax bill. We're talking about paying legitimate salaries to family members for real work they do, deducting a chunk of your car expenses, your home office, you name it. Every single one of these deductions shrinks that pie before the government even gets a chance to tax it. Okay, now as awesome as all this sounds, we gotta pump the brakes for a second. This is not a free-for-all. The CRA, well, they have some very, very specific rules. So let's talk about the important fine print. And here it is, the golden rule of all golden rules: documentation. You can't just say, oh, I paid my daughter a salary. You have to prove she actually did the work. That means having things like timesheets, paying her a reasonable wage for what she did, and having proof of payment. Your records are not optional, folks. They are your #1 defense if you ever get audited. And you really have to be careful here because the government has seriously cracked down on some of these income-splitting strategies, especially when it comes to paying out dividends to family. The rules are called TOSI, Tax on Split Income, and trust me, they are incredibly complex. This is not something you want to try and figure out on your own over a weekend. And that right there is exactly why getting professional advice is so important. The tax code is always changing, and your family's situation is completely unique. A good tax advisor, they're worth their weight in gold. They'll help you navigate all these tricky rules, set things up the right way, and make sure you're saving as much as you can legally and safely. So, when we put this all together, the big takeaway here isn't just a list of deductions to memorize. No, it's about a fundamental shift in mindset, a whole new way of looking at your family's finances. I want you to stop thinking about just your own individual tax return. Instead, I want you to start thinking like the CFO of Team Family. Look at the whole picture, all the assets, all the liabilities, your family's total net worth. Your job is to manage this whole operation as one single, super efficient financial unit. You see, when you started your business, you did more than just create a job for yourself. You built a vehicle, and it's an incredibly powerful one. It's a vehicle for building wealth and for being smart about taxes, not just for you, but for your entire family and maybe even for the next generation. So I'm going to leave you with one final thought. Ask yourself this. When it comes to your family's finances, are you still playing a solo game? Or are you ready to start treating it like a team sport, leveraging your whole team to win? Because honestly, the answer to that question could completely change your family's financial future.